We all know that most lenders deny most business applications. Up to 80% of applications of lenders receive are denied. And most applications are denied before even the lender looks at the application. And the culprit is the FICO SBSS score. Most people don't even talk about this scoring algorithm, but majority of business finance are evaluated based on the FICO SBSS score. So today we're going to talk about the FICO SBSS score, and I'm actually going to kill one of the biggest myths out there. A lot of people talk about building your paydex score. Did you know that paydex only accounts up to only 5% as it pertains to business lending? All because of the FICO SBSS score. What is the FICO SBSS score? FICO SBSS score stands for Small Business Scoring Service. It's a widely used scoring system, commonly used by SBA lenders, line of credit lenders. Most commercial lenders will use the FICO SBSS score, and this is critically important because in order for you to jump from the starter cards, like the business credit card, 0% financing type of loans that have really extremely high interest rate after the 0% period, you need to be able to have, good established financing for your business. Beyond, let's say, merchant cash advances, which are very high interest rate type of loans. They work, they're great for people that have limited documentation. But beyond that, in order for your business to actually succeed, you're going to be able to get access to real good long-term loans with great financing options. In order for you to do that, you need to have a good FICO SBSS score. And a lot of people don't even talk about this. So today I'm going to enlighten you on a few different things. What is the FICO SBSS score? What is the purpose of it? How do lenders use it? What makes up the FICO SBSS score, which is critically important? I'm going to really give it to you as a chart and as a guideline, as I explained before, as to what makes up your personal FICO score, the 5 things that make up your personal FICO score. There's a video that I've created here that breaks that down. I want to break this down in a very similar format so it makes sense to everybody, so you know exactly what makes up your FICO SBSS score. And basically what it is it's a scoring system created by FICO for businesses, for banks to evaluate businesses, correction. It ranges between 0 to 300, and I should mention that a majority of SBA loans, you got to have between a 140, 160 ideal FICO SBSS score in order for you to qualify for any basically SBA loan program. Now, where did this come from? It's created by FICO. Lenders, use it to quickly analyze and evaluate risk, of course. And they do this especially when you're talking about SBA loans. And any kind of conventional type of financing, of course, is to eliminate risk. And the reason why they use this scoring algorithm and why it's so different than anybody is each lender can basically structure how they want their FICO SBSS score to be evaluated. Let me make that make sense. Actually, it's going to make sense once I explain to you what makes up a FICO SBSS score. The FICO SBSS score is made up by 5 different factors. It's your personal credit, it's your business credit, it's your business financials, and it's different industry factors. And to break this down from a percentage standpoint, 35% of your FICO SBSS score is based on your personal credit. And if you're a company that's owned by multiple owners, up to 5 owners, anybody that owns more than 20% is going to be evaluated. They're going to look at your FICO score. So 35% of your FICO SBSS score is based on personal credit. That's huge. And we're going to dive deep into that here in just a second. A good chunk of it, 30%, is your business financials. We're talking about your bank rating, your debt to income ratio, debt to service ratio, I should say that on the business side, your NSFs, your taxes, your receivables and aging report. These are the things that account up to 30% of what your FICO SBSS score. Next is 20% is basically your business profile. We're talking about your industry, your time in business. In industry, I'm specifically talking about industry risks. Pawn shop is going to be completely different than a nursing home or a medical clinic or an accounting office versus a casino. You kind of see what I'm talking about. So 20% of your business is basically time in business, industry risk, your web presence, your social media presence. These are the things that they look for. 20% of your business equates to that. 15% of your business is your business profile. And this accumulates, they look up your Dun & Bradstreet, your Experian, and also your Equifax credit score. Each one of them accounts up to 5%, okay? And that's just huge news, because especially all those people selling business credit building programs with much emphasis on building your paydex score with promises telling you that you'll be able to go out there and get unlimited funding, $1 million more. They're just lying to you. And I continue to basically kill all these myths with facts. You can look up everything that I'm talking about here, okay? Most lenders, if you just really think about it, do you think a lender is going to help you get you access to millions and $1 million of funding based on a credit profile that you made up? Majority of what makes up the paydex score and, Dun & Bradstreet is stuff that you make up, stuff that you submit. Some of the information is verified financials, but the way you build it with the net 30 accounts and, the net 10 accounts, you think you can just do that and get up to an 80 paydex score and get access to unlimited funding, access to true cash. It's impossible to do so, and it doesn't really make any sense. Would you, as a lender, somebody that was offering financing to the marketplace, trust such a source? Of course you wouldn't. It's not a good trusted source. Now, it's a good way to show, it's a great compensating factor. That's why 5% of the FICO SBSS score is based on, your payday score. That's why, in my opinion, Experian doesn't allow you to do any kind of self-reporting. This FICO SBSS score gives so much control to the lender, because it basically tells them these are the different factors that are out there. We can look at their personal credit, we can judge their industry, we can judge what they've done with this personal credit profile. You can tell me which credit bureau you also want to pull as well, because we all know that lenders don't pull all 3 credit bureaus, which also tell you that your FICO SBSS score is not going to be as consistent as your FICO personal score, because your FICO personal score should be the same with every single bureau, depending on what FICO scoring model is being used. I don't want to complicate things here, but hopefully you'll follow me along. But your FICO SBSS score, you can go to Wells Fargo on the same day and pull your FICO SBSS score, and then go to Chase on the same day. It's going to be completely different based on how Chase stacks up what they want to prioritize as the things that are important. For example, Chase can prioritize your personal credit as being one of the most important things, or they can put that on the bottom. They can prioritize your paydex score. I don't know why they would, but they can prioritize that as being one of the most important things. They can prioritize industry. Let's say Chase specifically want to focus on lending to a specific industry, and they want to prioritize that as being the main factor, or vice versa. They want to stay away from a specific industry, so they put so much, negative factors from one specific industry, or the lender gets to customize their own version of their score, which is really cool, because with FICO, the lender really does it, on the personal side. This way, they can really have a way to focus on their appetite, based on the type of lender that they are. There's some lenders that do focus on high risk. There's some lenders, those are, C, D, F paper, if you want to call it. And then there's some lenders that are A and B paper. And there's some lenders that are strictly A plus paper, if you understand what I'm saying. So that's the cool thing that the FICO SBSS score allows the lender to do. I want you to know that your FICO SBSS score can and will be different in every single lender based on how they want to stack it, based on what credit bureau they use. But it's important to understand what makes up your FICO SBSS score. And if editor, you can put that on the screen, and I should have done that on the other part as well. 35% is the strength of your personal credit, and this is the personal credit of the owners of the business. Anybody with more than 20% interest, their personal credit is going to be evaluated. 30% is business financials, and I'm specifically talking about your bank rating, which we're going to make a video discussing that on another video. Your debt to income ratio of the business, NSFs, tax returns, receivable, account receivable, and aging report. These are information that is submitted to some of those third-party credit bureaus out there. You can submit. So, that's where the compensating factor, the clock, comes in, based on how much you've, prepared and organized all this information. So, and I say that to let you know that it is important to still build your paydex score and your Dun & Bradstreet profile, but it doesn't hold as much weight as you were promised, as I was promised as well. I thought 80 payday score was equivalent to like a 700 FICO score, but that's absolutely not true. 160 FICO SBSS score is equivalent to a 700 FICO score is what you need to have the understanding of. 20% is based on your business profile, industry, time in business, web presence. I believe they're tapping into social media presence here as well, your reviews online, as far as your reputation as well, that equates to that. And only 15% of your credit is based on your business credit reports. 5% goes to DMB and Paydex, 5% goes to Experian, and 5% goes to Equifax. Of course, we don't have TransUnion on the business side. So anyway, so now that we know what FICO SBSS is, we know lenders look at this, especially when you get into the arena of getting really true bank conventional financing is heavily looked at. This is sometimes the reason why your personal credit looks great. You apply for business funding and you still get denied is because of your FICO SBSS score. So you need to take a look at that. The strange thing is there's nowhere you can go and get your FICO SBSS score, which is really weird. And I understand why the lenders are protecting that, because, again, once we have access to a credit profile, we tend to manipulate it, just like as we've done with personal credit, which lowers the value of those reports as it pertains to, from a risk standpoint, to the lenders. But, it's vice versa. As consumers, we need to be able to have the ability to dispute, because lenders sometimes do phony stuff, like collection companies. Majority of the information on people's credit report has tons of inaccuracies. The only reason they're able to do this, in our opinion, on the business side, not giving us the opportunity to even get access to that report, is there is no Fair Credit Reporting Act that protects businesses. There is no governing law or governing body that lives and breathes as the Fair Credit Reporting Act on the business side. So at the moment, this is what we have to deal with. But I can understand the argument being made from the other side, from the lender's perspective, that this gives them the ability to truly evaluate risk from a second priority item as it pertains to business funding. Because business funding, businesses are risky. And lenders need to be able to have a better way to gauge that risk so they can protect the marketplace, But those are kind of some cons. What are the takeaways for this video? Number one takeaway is know what your FICO SBSS score. That's number one. Number two takeaway, don't solely rely on your Paydex score and Dun & Bradstreet. Even some of the promises that they make with building your credit only equates to 5% of what makes up this really important scoring algorithm, FICO SBSS score. Another thing is the takeaway as it pertains to what makes up your FICO SBSS score. It's critically important that you build your business, your personal credit. It's critically important that you get in the right industry or structure it well, as far as whenever you set up your business, because 20% of your business is almost out of your control. When we're talking about industry type, time in business, time in business, maybe you can buy a seasoned, corporation. But this kind of defeats the purpose as to what FICO SBSS is trying to do and how they want lenders to utilize it. They don't want people to do plain old manipulation game. Anyway, don't want to make this video long, as I always do. Link in the description if you want to go ahead and work with us. If you didn't know, you should know. Name is Brian Muckman-Sotieno, founder of Pantech Consulting Group, where we help small business owners start, grow, or even expand their current businesses. And then also Broker Solutions Academy. We help brokers just like yourself get started in this industry, and we teach you how to become a real business loan broker, not a glorified referral partner. There's going to be a link in the description below on how we can work together. I appreciate you for joining me today. Do all that YouTube stuff, like, subscribe, and hopefully you got some value from this video. I'll see you in the next one.